Hi guys, KP this side from InvestorWise. Hope all of you are doing good. Wish you all a happy Dashera, and we just hope that the next 1 year turns out to be a great year for equity investing with bulls dominating the markets. Okay, now if you this is vlog number 42. If you haven't seen vlog number 41, I strongly suggest that you first see vlog number 41, which was done 10 days back, and my today's video is primarily going to be interlinked with that particular video, and it is going to be an extension of our discussion from there on. So if you haven't seen vlog 41, see it, will make a lot of sense. And if you would have seen last 10 days, things have almost happened the way we anticipated it 10 days back. So now, where are we placed right now? The last 1 week was very volatile, like we anticipated, where the first few days was full of pressure. Even Nifty was testing the levels anywhere between 16,800 to 17,000, but thankfully it was able to maintain its support around 16,800 mark, with Dow and Nasdaq being under tremendous pressure even last week. In fact, till Friday, the Dow was under a lot of pressure, and the two big reasons for that being, number one, Fed had made a statement very clear that Fed will be taking a tough stance as far as inflation is concerned, and they have to be very strict about its interest rate hikes till the time they don't see inflation coming under control. And second was, Mr. Putin was supposed to make a statement about his Ukraine, the war with Ukraine that is going on, and they don't seem to be backing out at any point of time, which means the war is probably going to continue for some more time, and the negatives which come along with it will also be there. In fact, on Friday, when Mr. Putin did not show any intentions of backing out, some more sanctions have been put against 300 Russians. Now, that can be corporates or that can be any major players in the Russian market, but 300 new sanctions have been applied because they don't seem to be going out of this war with Ukraine. The more the war stretches further, more is its economic impact globally. So, for Indian markets, the last monetary policy which happened last week, the RBI governor has given a lot of assurances that things in India are very different from the global markets, which I told you also last Sunday when I did my video. And he assured that we have inflation very much in control. Interest rates will be increased, but then the increase in interest rates will not be as intensified as we see in some other parts of the globe. Here in India, things are under control, and they are very hopeful that by 2023, inflation will very much be in control. As a result of which, probably the first half of 2023 is when we anticipate inflation will be under control, and accordingly after that, maybe interest rate hikes will not happen. Based on this, you would have seen markets did pretty good on the last couple of days of the last week, and Bank Nifty on that particular day when this monetary policy was discussed, Bank Nifty did 1,000 points up, and we have seen a good revival in the Indian markets. In fact, we were able to sustain above 17,000 levels the last week, and yesterday also Indian markets have done pretty good. One big reason for that being that overall sentiments are again looking to improve. So this is how markets are, guys. Something which looks very negative on the sentiments, within 5 to 7 days span things can change. That's how it happens. But the crux of the story is Monday and Tuesday, both these days the US markets have recovered a lot from their lows, which means on Friday both Nasdaq and Dow Jones have created their new lows. The same proportion fall did not happen in India, which again I anticipated in my last video that US markets may fall a little more, but then we are not anticipating a similar kind of a fall in the Indian markets, which is what exactly happened. In fact, on the contrary, we started going up on the levels, and now we were somewhere between 17,200 to 17,300 mark, which means today market is closed back here in India, but yesterday's closing in US was again a stupendous one, with Dow Jones going high by 800 odd points and Nasdaq going up by 330 points. Since June, these 2 days, that is Monday and Tuesday, happen to be the highest possible upside in both Dow and Nasdaq. Since June, this has happened for the first time. Does that mean the risk is over for us? The answer is a big no. It doesn't mean the risk is over for us. Yes, this is a kind of what do I say? A kind of a small recovery that has happened. Okay, but you cannot say that the trend is changing now and now the markets are going to only go up from here. But one thing is for sure, that as far as the fears of recession is concerned, these fears are still there because things are still not in control as far as the US economy is concerned. So what we need to understand now is that at this point of time, just because a couple of days you see the markets going up, you are not going to go full-fledged into the buying mode. That is what I am trying to make you understand in this particular video. What you need to understand is, today if you see the SGX Nifty is showing some 150 points up, which means SGX Nifty is close to 17,450 mark now. The next resistance probably I think will happen around 17,500 mark. If only above 17,500 mark we are able to hold for some decent time, which means we range anywhere between 17,500 to 17,700 mark, that is when you can start anticipating that markets will again start to move towards its all-time high of 18,600. But till that time, the situation is going to be a little delicate and we have to be very, very cautious in taking fresh positions. So what do I suggest over here? Number one, what I told in my last video, just because of recession fear going around in the economy, is it that I should just take out all my money from the market? The answer is no. You should not take out your money from the market, but you have to be very careful in how you are utilizing your money. If you have free funds in hand, how you are utilizing your money. If you have existing investments, how you behave with those investments. That is very important to understand. Now, my suggestion to you is this: if we are able to sustain above 17,500 levels, whatever existing holdings you have in hand, if you see profits coming in your positions, it is advisable that you start booking your profits. That is what I would advise you to do at this point of time. Anything above 17,500 levels, wherever you get an opportunity to book profits, book your profits and stay light on your overall exposure. This is my first suggestion. Now suppose if US markets, after this small revival, after this small upside, if there is again a fall in the US markets, then to some extent even Indian markets would be under pressure. And if this happens, then my suggestion to you would be anywhere above 17,200, 250 mark, the idea should be to lighten up your positions by booking profits wherever possible. If you don't get profits, then it's okay to hold on to your positions. But if wherever you get an opportunity of exiting your positions, do that. And then you should wait for some time. Between 17,250 to 17,600 levels, fresh buying should be done in a very, very limited manner. In fact, I would suggest if you want to be watchful at this point of time, there is no harm in holding on to your liquid funds and not investing. Anything between 17,250 to 17,600, 650 range, better to lighten up your positions and not take fresh trades in order to understand the next set of trend that is going to happen. Which means if you go above 17,650, 700 range, that is when you can anticipate that markets will try to reach out for its previous highs of 18,600 levels. That is where you can slowly start putting in your money. But if suppose markets are going below 17,250 range, that is where I want you to, suppose if you have 100 rupees in hand, so what I would suggest you to do is anywhere between 17,250 to 17,000. So suppose if you touch the 17,000 levels in coming weeks, that is where I would suggest that you put at least 20% of your capital. I'm talking about the money in hand. This 20% you can invest when you reach 17,000 levels. Next point of investment, fresh investments would be around 16,750 to 16,800 levels. which is again another 20% of your liquid funds you can put into the market. And if it goes down to 16,500, which honestly speaking, if you ask me, seems a little difficult scenario, keeping things in mind of what's happening around us. But if it goes down to 16,500 levels, that is where you can put in another 30 to 40% of your liquid funds. So around 17,000, you will put 20%. Around 16,800 mark, you will put another 20%. And around 16,500, you can put 30 to 40% of your funds and still have that remaining 20% holding in hand. For keep that money aside, will be useful for you if we have to see further fall in the markets. But overall, if you ask me, the fear of recession, like I told you in my last video also, is overly exaggerated. What I feel is, I'm not saying that recession possibilities are completely ruled out, but what I'm trying to tell you is, if we are so much prepared for a recession to hit the economies globally, then at the same time, different countries with their monetary policies are doing sufficient enough, they're taking sufficient enough measures to take care of this recession also. So even if recession has to happen in the economy, probably its impact will not be very, very knee-jerking kind, because it's not something which came out of the blue. We are mentally prepared for this kind of a scenario, and accordingly measures are being taken by respective governments, like I told you earlier also. As far as the sectoral preferences are concerned, like I told you in my last video also, I told you very clearly, I would probably try to stay away from banking and financial service stocks for the time being. I will personally stay away from auto sector for the time being. I will personally stay away from FMCG for the time being. And I would prefer to put more of my money in IT and defensive sector like pharma. This is where my preferences are. Even in fact, guys, if you would have seen the last 9 days since my last video, IT has done reasonably good, and pharma has also done very good in the last 8 to 9 days of trading. Again, as far as IT sector is concerned, like I told you in my last video also, try to bifurcate your money equally between small mid cap and large cap stocks, where I told you stocks like LTTS, LTI, Mindtree should be considered, Persistent, Coforge. These are your stocks from mid cap, and from large cap you can prefer stocks like Infosys and Wipro, and even HCL Tech is good. As far as your pharma sector is concerned, I would like to stay with the leaders, Dr. Reddy, then you have Divis Lab, then you have stocks like Lupin. These are the stocks which I would prefer to go ahead with. On the other hand, like I told you, to stay away from banking shares or financial services, but I would still prefer to have a few of them in my radar. One being Tata Motors. Tata Motors September numbers have turned out to be its all-time highest sales being registered. Tata Motors for me at around 400 is a share, hands down the best and the safest investment in auto sector, with around a potential upside of at least 40 to 50% being possible in this script. At least I would say 35 to 40% is possible in near term future, which means around 400 rupees you can buy Tata Motor with a target of around 500 to 525 in mind. If it can go past that level of 525, 530, then it may be heading towards its new high of 575 to 600 rupees. But this may test your patience, but I think Tata Motors is worth investing in. Apart from that, other auto sector stocks, I would still prefer to hold on to them. I don't want to make any fresh investments in them. If you have auto sector stocks with you like Eicher Motor or Maruti, my personal suggestion would be to book some profits over there. Chemical stocks, again, I feel most of them are decently priced. In fact, some of them are very close to the 52-week high. I would personally stay away from stocks like SRF or Naveen Fluorine. I don't want to do fresh investments in these stocks at these levels. But for me, Deepak Nitrite around 2050-60 mark. Yesterday, I think it did 2100, but Deepak Nitrite still at 2100 looks good to me. And apart from that, I would prefer to go for UPL. That is another good stock to consider. In fact, I would say if you want to go with safe bets for now, I think Tata Steel in metal sector, although metal is out of favor for the time being, but I would say that corrections in metal have been very harsh. And for me, Tata Steel is a very good bet. Again, keeping a long-term horizon in mind, because the stock has done a high of 1400. Then the stock split happened, and the equivalent value should be 140. But right now, Tata Steel is trading close to 100 rupees, which means there is almost a 40% discount in the stock. Right now, Tata Steel from long-term perspective is a stupendous stock, guys. You can consider buying it. Apart from that, my all-time favorite is Reliance Industries. Reliance close to 2400 mark is a very good investment. In fact, yesterday I was reading that the beta version of its 5G infra facilities will be made available in few of the cities, and they will be full-fledgedly, maybe they are planning to launch their this 5G network by the Diwali this year. So maybe by end of October they will start introducing 5G across different places in India. And with its current valuation of 2400, with a face value of rupees 10, and the kind of earnings that Reliance is registering for all these years, I think Reliance is a very good buy. In fact, I would say that if Indian equity index has to go past its last high of 18600, Reliance has to be a big contributor to it. That is what I feel. So this is my general view on the markets overall, guys. Try to go slow with your investments. Don't get carried away. A couple of days markets going up should not be considered as a trend change in the market overall. Yes, if you genuinely ask for my views on the market, as I told you in my last video also, I feel we are very well placed from here on. Just think about one thing, guys. If US markets revive, because for Dow Jones the high is 36,000, it is still trading at 30,000 with 52 weeks low of 28,700 something, which means it's still considered close to its 52-week low. And same goes with Nasdaq low has been close to 10,200 mark or something, and its high is again I think 16,000 something, which means again currently it is around 11,100 mark, which means it is still very close to its 52-week low range. From here on, the probabilities are we can see more upside in these indices. If these indices have to go up, then you can understand how much FII money is going to come into India also, because FII is constantly participating in Indian markets. The moment there is the smallest of the change in sentiments from negative to positive, the moment you see sentiments changing from negative to positive, lot of money is being coming into Indian equity markets. Yes, last 1.5 months have been like that, and that is one big reason why Indian markets have been able to sustain above 17,000 levels. If US market sentiments improve from here on, lot of money is going to come into Indian equity markets, and I may sound over optimistic about it, but if that continues for 2 months, then you will find Indian indices, Nifty especially, going anywhere between 18,500 to 19,000 mark. I know I am making very bold statement, but that is a view just to keep in your mind, but not invest aggressively based on that. I am making a disclaimer very clearly about it. So, as I told you, I will just recall what I said. 17,250 to 500 or 17,250 to 650 is a kind of decisive zone where if you can go past 17,650 mark, you probably are again re-entering into a bull phase. Anything below 17,250, look, I won't call it a bear phase starting point, that will be too early to say, but I would start looking for opportunities to invest some more money in the market. At 17,000 is my first entry point with 20% of money invested in the markets. 16,800 would be my second level at which I would like to put another 20% of my money. 16,400 to 500 is the zone where you want to put another 30 to 40% of your money, and you should still hold on to the remaining 20%. I don't see markets going anywhere below that. That is again my personal opinion. I may be wrong. On the other hand, anywhere between 17,250 to 17,650, wherever opportunities come, book your profits. If you have any profits, unrealized profits, make them realized profits. What you realize is yours. What is unrealized is only in the books. So realize your profits between that range. If we can sustain above 7650 level for a couple of days, that is where we can start experiencing a change in the trend. and then from 7700 you can also slowly start making fresh buys wherever you see opportunities are there. Because you understand one thing, guys, if markets have to go above 17,700 level and then move towards 18,000, 18,200, eventually 18,500, 600, the biggest participation has to come from IT and pharma. Understand that very clearly. The biggest participation has to come from IT and pharma, and few of the scripts like I handpicked, like Tata Motors or UPL or like I told you, or Tata Steel, or for that matter Reliance. These are the stocks which you can handpick from diversified sectors. But I would still prefer to put less of my money in banking and financial sector and less of my money in auto sector and FMCG. Banking, again, the safest bet for me in banking would be HDFC Bank, which has not shown any upside whatsoever in the last few months. Around 1440, 1450 range, I would say HDFC is the safest bet for you in banking sector. That is what I would prefer. So keep these points in mind, guys, and till we meet again, bye bye all of you. Stay well, stay bullish, and go slow with your fresh investments, guys. That's a suggestion from my side. We'll soon come up with next video where I will now. The idea is, guys, from starting from my last vlog. Now, whatever we talk, we'll try to talk in link with my last vlog. So if you see this series, you start from vlog number 41, then only it will make sense to you. Thank you, guys. Thank you. Cheers. Bye bye.